The truth is in the charts. Therefore, you need price charts and you need to learn how to read them. In this video, I'll walk you through the fundamentals of charting step by step so you can start making sense of the data from the ground up. In episode 1, I explained how this is average prices. It's a moving average over 20 periods. That's 2 standard deviations, and that's 3 standard deviations. These are Bollinger Bands. Bollinger Bands are dynamic. They're always changing because they're calculated on the previous 20 candles. That means this is a dynamic strategy. For example, when the current candle closes, this green band might come higher. And in a couple days, because this is a daily chart, the green band or 2 standard deviations might come up to hit the candle, and therefore the price will be higher when it hits an extreme price. Likewise, with 3 standard deviations, you can see that it is curving upward to meet the price as it comes down. The slope of these bands does have some significance, and I'll go through what that means in a later video. I want to keep this particular video very simple and basic. So I'm coming from a background of trading futures and options, and successful traders in those markets have generally mastered charting. In the crypto world, however, I'm noticing that many people have no idea how to read a chart, and they don't even consider themselves to be traders. They simply put money into crypto because someone on social media told them to. Well, if you buy crypto, you're a trader, because the only way to make money from it is to eventually sell it. Even if that's years later, that would mean you're a long-term trader. So for people new to trading or to charting, I'm going to start with the most basic parts of a price chart. So this is a price chart for XRP against the US dollar. It is a daily chart, and the data is coming from Binance. The horizontal axis down here is time, and the vertical axis is price. And since this is a daily chart, the candles each show price fluctuations within 1 day. If I made this a 1-hour chart, then it would be price fluctuations over the period of 1 hour. So this is 1 hour. Blue candles occur when the closing price for that candle is higher than the opening price. So this, you can see this blue part, pick any candle here, this blue, that's the body. And they call that the body, and then this thin line is called a wick. You might get a wick at the bottom and a piece of a wick at a top. The thin line is called a wick, and the thick area is called the body. So on a blue candle, the opening is down here, the opening price. So if this is a 1 hour, at the end of this hour, that candle will close and it gets printed. It is now part of history, permanent price action history. Then a new candle opens, and if it is blue, it's going to open here and close higher. So even this little one here, it opens here and closes higher. A red one opens up here and closes lower. It's showing that the majority of the price action, at least how it finished off, it is downward. And the wick at the bottom shows the lowest price that it reached during that 1 hour period. And a wick on top is the highest price that the price reached during that 1 hour period. This candle here is not yet printed. It is still in formation. It opened up here and it's falling. And you can see here it's got 22 minutes and 52 seconds left in it before it prints and becomes part of permanent price action history. The current candle could end up red or blue, depending on whether the opening or the closing price is higher or lower than the opening. In this case, it looks like it's probably going to close red because it's really driving down. So these time frames, these are called intervals. And depending on the interval that you're viewing, this axis of time, it could be minutes, it could be seconds, days, it could be months or years. See, this is the 17th of May and the 24th. So you've got, a few trading days in there. But if I'm looking at a 1 month interval, you can see that is price fluctuations within 1 month. This goes back to 2014 when XRP was, just starting to trade. So of course I can change the market to anything that I want. I could make this Bitcoin, but I can also choose what exchange I want the data to come from. So here's Bitcoin against the US dollar from Coinbase, or I could do it from Binance or from Kraken. And here's Bitcoin futures from the CME. Bitcoin futures started trading in 2018. So if I look at a daily chart, I can see that this market responds very well to extremes. Look how it dips down almost to 3 standard deviations, moves up, 3 moves up each time. Look at this one, big move off of there. 2 wicks hitting 3 standard deviations, then a big blue candle off there. That is complete rejection of the downside. There were no sellers left here. And this is down at $74,000, and now it's went over 112. Now, if you're completely new to charting, you might be wondering how to set this up on your charts. In episode 1, I mentioned that this is a free trading package from TradingView. It is limited to 2 indicators. I have 2 on here, and to 1 time frame. I trade with many time frames sitting on my screen, usually about 8 different time frames, but this is sufficient to follow along with the lessons. So what I'm going to do is erase these indicators and then show you how to set them up. You can sign up for a free account with TradingView and then do what I'm doing here. So the first thing I'm going to do is add a 3 standard deviations Bollinger Band. So I'm going to go up to Indicators and click Technicals, and then scroll down to Bollinger Bands. Not this one or this one, but this one right in here. Click that, and it puts this on the chart. So now I'm going to right-click this, and I'm going to go down to Settings and Inputs. Right here, this is standard deviations. I want to start with making that 3 standard deviations. This is 20. It's going to calculate over 20 periods or 20 candles. I want it to wait for this time frame to close before it allows the band to move. So click that. You can keep this one checked. Now the style for this 3 standard deviation I like to have, let's say something like this color right in here, pink. No, actually this is, the basis is the middle one here. It's the moving average in the middle. So that one I want black. And I make this circles like that. So here's the upper band, this one, and this is the lower band. You can uncheck background. I want to get rid of that blue, and let's do this color and make it this line thickness. Click here and then go to the lower one, same color, same line thickness, and you can see on here it looks good. Now this is the label on the price scale. So you can see here where that Bollinger Band is, it's at that price. And here's the lower one. Visibility is if I change the time frame to anything else, what do I want it to be visible on? So I check all of these. Every single time frame I want to see this band on. So all these should be checked. So now that's okay. And there's my 3 standard deviation bands. Now we'll do 2 standard deviations. So again, go up to indicator, make sure technical is there, bands, and now I have another one. So I'm going to right click this, go to settings, inputs, and I want it to stay at 2. And the style, again, this is, now this one I'm going to uncheck because it's already here. I don't need another one. Here's going to be the upper one, and I want that to be green. And let's make that a little thicker. And then the lower one will be green, same thickness. It's okay to have those checked. And again, I want it to be visible on all time frames. Oh, I forgot to get rid of the background. So under style, uncheck the background. I don't want that blue highlighting in there. So that's it. That's how it will look if you're using the free package. I have a paid package, so I also put 1 standard deviation, which is going to be halfway between the moving average and 2 standard deviations. I put a gray one in here. You'll see in other videos, but you don't really need to do that for now. You can also put alerts on these indicators. So for example, I could right click that and put add alert on Bollinger Band. And if the price comes down and hits that, it can send a notification by email, or it could play a sound on the screen. This toast notification is, there'll be a little pop-up in here. It'll make a sound, a little pop-up, and say what the alert is from. And you can change the message. You can put a message in here. Usually I'll just say that whatever the market is, let's say Bitcoin, the Bitcoin daily chart hit -3 standard deviations. I can have that be sent to my cell phone, and then I know I need to be in front of my screens to see whether or not the price is going to bounce off of there. So all the alerts will be in this section. These are various markets that you can quickly click through. So there's the SPX, you know, the NASDAQ. Here's various tech stocks, you know, some futures, Forex. Here's some crypto. It's really a great charting package. So that's it for this video. Keep it short and simple, and I'll see you on the next.